Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve, and here are some of the trends we're going to be diving into. Stocks mostly higher on the day. Optimism over U.S. trade deals helping drive those gains, plus a weaker than expected reading on the labor market, bolstering the case for the Federal Reserve to start cutting interest rates. We're going to dive into the top takeaways from the day. Plus, Americans are hitting the road this weekend for the 4th of July, but while traffic might be bad, filling up at the pump might not hurt as much. And an $88 million satellite with backing from Jeff Bezos, Google, and SpaceX, it's missing in space. We're going to get you the details later in the hour. Well, the S&P 500 and Nasdaq leaping to fresh records as the Vietnam trade deal boosts hopes ahead of that June jobs report. Yahoo Finance's Ali Canal joins us now with the trading day takeaways. Ali.
Hey, Josh. Yeah, news galore today. Like you were just saying, new all-time highs for both the S&P 500 and the Nasdaq on the heels of that trade deal with Vietnam. But I also want to zoom in on the tech trade because there are a lot of individual movers there as well. So if we peek under the Nasdaq 100, you'll see that Tesla finished the day up around 5%. This comes after deliveries came in shorter, below expectations, but we did see the company produce more cars there. But if you look over the past 2 months, it's been pretty brutal for this stock year to date, I should say. Not the past 2 months. We're actually up 10% the past 2 months, but year to date, we are down, there we go, over 20%. Definitely one of the biggest underperformers of the Mag 7. And then Apple is another story here. Also has been an underperformer this year, down about 15%. We did see the stock close up about 2% today after Jefferies upgraded shares to hold from underperform. They see some catalysts ahead when it comes to iPhone demand, and then there were also reports that Apple will explore using AI from outside firms, so that helped boost shares today as well. And then finally, Microsoft, the stock didn't do much today, but the company is laying off 4% of its workforce. That translates to just under 10,000 employees. And this comes as the company has really doubled down on building out a lot of those data centers, sinking money into AI. They've pledged to spend around $80 billion this year alone. And then I also want to take a look at some econ data that we got, and really all eyes are on the jobs report. So earlier this morning, we saw private payrolls decline for the first time in more than 2 years. So we actually had a loss here of 33,000 jobs. And what's interesting is that this isn't coming from layoffs. It's actually coming from people leaving their positions, and then companies are just not rehiring to fill those roles. So it suggests that we could be seeing this slowdown in the labor market. No alarm bells at this point, but it does set us up for that crucial jobs report tomorrow. This is according to Bloomberg consensus estimates. There's an expectation that we will add 110,000 non-farm payrolls with the unemployment rate at a slightly higher there to 4.3%. So a lot riding on this June jobs report, especially as we think about the Fed.
So is that basically it'd be more evidence of that kind of same theme, Ali, we've been talking about in the labor market, which has been kind of cooling, not crashing?
Exactly, cooling, not crashing. I mean, if we go back to this ADP report, you'll see that we've had some declines over the past few months. That hasn't necessarily translated into non-farm payrolls, but that doesn't mean that that's not coming down the pipeline. So it's a big point to focus on because there's been a lot of back and forth about when the Fed is going to cut interest rates. And that brings me to my last takeaway, which is a check-in on this bond rally that we've been seeing. So Josh, you and I were talking about this yesterday, that despite a lot of these fiscal concerns, long-term yields, they've not done much here. And we did see earlier this spring a huge spike in the 10-year note. You can see that spike happening there. We've definitely come down off those levels. We're hovering at around 4.3%. Same with the 30-year yield. We're at 4.8%. And I attended a mid-year outlook earlier this morning from BlackRock, and I asked them about this because we really haven't seen a lot of those risks disappear at this point. And they told me a big reason why is because there's been this recalibration of Fed cuts. So markets are pricing in between 5 to 6 cuts by the end of next year. And they told me that that might not materialize because we haven't seen inflation work its way through the economy. And if we continue to have sticky inflation, that's going to keep the Fed on hold at least maybe a little bit longer than markets expect. And it'll be interesting if we come to September and we don't see that Fed cut, because at this point, it's been basically 100% priced in by markets. I wonder how the Fed, how markets will digest that if we still see this higher for longer trade.
At that in conference, did they give advice to fixed income investors who were listening?
Yeah, I mean, they were saying that right now there's this new paradigm within markets, and a lot of those macro fundamentals like, inflation, labor market, that's completely gone at this point. So how do you position within this environment? And they say that there's these new mega forces that have emerged, AI being one of them. So they are still bullish on fixed income. They are still bullish on U.S. equities, but they did also allude to the fact that there's ways to hedge a lot of your currency bets, for example, with the U.S. dollar plummeting. You can look overseas now. Those are options overseas. And in terms of yields, they didn't seem too concerned about the spike that we saw earlier. They said a big part of that was due to the term premium, which has risen and really gotten back to normal levels after the great financial crisis. But you really want to look at the rate of change here. It's not necessarily the level, it's this rate of change. If we see this spike in yields and that happens really quickly, that's when we could see this pressure on equities. But as it stands right now, we haven't seen any substantial moves either way. So that's a positive for stocks.
All right. Thank you, Allie. Appreciate it. Stick around. Much more Ask for a Trend. That's still to come. Lost in space. That's what happened to an $88 million satellite backed by Jeff Bezos, Google, and SpaceX after losing contact with ground control on June 20th and losing power on July 1st. The Methane Sat launched in March of 2024. It's an environmental defense fund satellite collecting data on methane levels in Earth's atmosphere, which were previously untrackable. It's part of an effort to fight climate change. The ground control team says the spacecraft gave insight into the volume of methane entering the atmosphere from oil and gas producing regions. But a number of technical difficulties and glitches emerged after the satellite was launched. Teams monitoring the satellite say it is likely unrecoverable and will be investigating its disappearance. Despite the loss, researchers do say that practices and information from this satellite will assist with conducting future methane measuring missions. Well, we're looking at the future of finance. Market Sunrise host Ramzan Karmali sat down with Kraken co-CEO, who is involved in leadership at several other companies at the intersection of finance and artificial intelligence. One of the other hats he wears, chairman of Tribe Capital, a venture capital firm. Take a listen.
I wear a bunch of different hats alongside Kraken. And so at Tribe, the real goal at Tribe really was that in a world where capital is about who you know versus what you know, how do you build to be able to bifurcate against that? And the reason I say that is that we never wanted to have an entrepreneur come to us and meet with us and pitch their idea and be turned down because of what their resume was, or where they grew up, or who they are, or the color of their skin, or their gender identity. So you take all those pieces out. What really matters is what have they been working on? How is that innovation continuing to grow? How can you quantify that? And then what are the aspects that you can use to make sure that you can identify what's the specific product market feature sets that they have, and how to help them scale and grow that. At Tribe Capital, almost 20 to 30% of our capital is in emerging markets, but these emerging markets companies are just as good, if not better, than what you see traditional companies in the U.S. markets or European markets. And so our goal was to identify the best. And had we done that before? We did. We had identified Slack really early on. Before they went public, we were early stage investors at my previous firm. We had done that with Snapchat. We had done that with Square. We had done that with Lyft. We had done that with Uber. We had done that with a whole host of companies in our life cycle of not just investing, but being operators at the same time. So when you say, does AI exist? AI only works to augment something that's working. So our firm today, what we focus on is that getting the data from those companies, helping them with insights to be able to grow. And through those insights, we're able to then help think through our time, our capital, and our position to be able to get them to be as successful as possible and as large as possible.
You said earlier that you wear many hats. One of your other businesses is Termina. How did you get the idea for this?
I think if you look at Benjamin Graham and what he had done for accounting and then benchmarking, and company A versus company B versus company C, and the whole world of finance that is built upon that, that is essentially what we do in the private markets and now public markets. with Termina, which is all the ways in which we invested, all the ways in which we got successful at investing and returning capital to our investors. We wanted to be able to bridge that gap so that we could build software where companies can use it, other funds could use it, other folks that are asset allocating or capital allocating could use it, so that it became more of a standard in the ecosystem. And so I'm happy to say that our data points now are almost 36 million companies have interacted, and we've got data sets around how they interact with each other. And we've got a whole host of folks that think very similar to us, which is how do you evenly distribute capital to companies that are worthy or need it, rather than companies that just have a good pitch but not a good product.
And that's not all. Arun also is the co-founder of Capital. That's a bank and tech platform that leverages AI to support small and medium-sized businesses and their operations. Sethi explained why he sees opportunity in that space. Take a listen.
So look, one of the most exciting things about where I get to sit and who I get to work with is that we get to meet with entrepreneurs that have a vision every single day. And then on the other side, and they build great products and they build great software for their customers. And on the other side, you have us as asset allocators that have built companies before, that have scaled them, in some cases to tens of billions of dollars in enterprise value, that have built a roadmap in the way in which we think companies should be built. It doesn't mean it's right or wrong. It just means that it's worked for us in the past. And so what we decided to do is, for a lot of these emerging markets, we used our same infrastructure for how we think about quantifying product market fit or quantifying health of a company. And we started looking at emerging markets that need, again, access to capital. What are the ways in which to do it? But it's not just for startup companies. It's for the mom and pop shop. It's for someone who rotates tires. It's for someone who owns a travel agency. And in a lot of these emerging markets, in the case for Capital, we had a pretty unique value proposition for what we believe we could deliver by being a bank and building software around a bank, bottoms up, right from the beginning, software that was attuned and articulated for those customers, where they could do payroll, where they could lend, where they could do payroll advance on behalf of their employees. They could do expense management in a way where they don't have to go and buy some third-party services that are not for them, but it might be for a U.S. customer. So we built a bank from scratch, ground up. We built the rails from scratch, ground up. And we built a software to be able to touch now, I think, almost over a couple 100,000 merchants just in Mexico, Colombia, and Peru. And then these merchants are able to deposit. They're able to lend, to be able to take loans against their assets. They're able to do now employee benefits and payroll, everything that they need to do to be able to be successful.
Americans are hitting the road this weekend for 4th of July, and while traffic might be bad, filling up at the pump might not hurt as much compared to years past. For more, we're bringing in now Patrick DeHaan, Head of Petroleum Analysis at Gas Buddy. Patrick, always great to see you. So, listen, we know millions of Americans, Patrick, this weekend they're going to hit the road. Before that, they got to fill up the tank. Let's start there. The national average for a gallon of regular gasoline, Patrick, where are we now? And where do you see that headed near to intermediate term?
Yeah, Josh, things are finally starting to settle back down after tensions in the Middle East caused gas prices to jump. Now they're coming down right in time for July 4. The national average now at $3.15 a gallon. That's about 7 cents lower than it was last week at this time. And the good news for the American people that are driving for July 4, gas prices now 38 cents lower than last year. In fact, collectively, Americans between Thursday and Sunday are going to be spending $500 million less on filling their tank up with gasoline this year compared to last year. So some good news at the pump, to your point.
And looking ahead, Patrick, what do you see?
Yeah, as we get into the second half of the summer, traditionally, if everything runs normally, if refineries don't have any issues, if Mother Nature cooperates, if we don't see any more flare-ups in the Middle East, traditionally gas prices do tend to taper off as we progress through the summer. We just got a great inventory report today from the Energy Information Administration highlighting a big 4.2 million barrel increase in gasoline supply. That is what we can expect through the summer as those inventory levels build. They generally contribute to pushing prices down. The one wild card, especially as we get into July and more so August, is Mother Nature. The peak of hurricane season really starts to show up in mid-August. So if you're planning a late summer road trip, just be mindful that if we do see any major storms, especially in the Gulf, they can be disruptive. or if anything re-escalates in the Middle East, that could be problematic. The other thing we continue to watch, OPEC is probably one of the bigger stories why gas prices are so much lower this year than last year. OPEC increasing production. They may decide to continue doing just that in the months ahead as well, and that could contribute to potential for sub $3 prices as we get into the closing innings of summer.
Wow, potentially sub 3. 315 now, Patrick. I'm always curious. So that's nationally. Always love to get your take regionally. What's going on? Where in the country right now? Where would you be paying the highest? Where would you be paying the lowest?
Yeah, the West Coast, California, typically the nation's top when it comes to most expensive. They're paying an average of $4.55 a gallon. Keep in mind, California is leading the nation in terms of gasoline taxes. It has a cap and trade program, low carbon fuel standard. All of that generally keeps the West Coast much higher. You look at areas like Illinois, Pennsylvania, also on your map there. Those are states with very high gasoline taxes. In fact, Illinois, just over the July 1st holiday, boosting theirs to the second highest. Ultimately, the Gulf Coast, proximity to those massive refineries in Texas and Louisiana, and a combination of low gasoline taxes and a major pipeline keep your gas prices much lower. So 20 states now today with sub $3 a gallon gasoline just in time for the holiday. That list should actually grow as we get through the holiday and into next week.
455 in my native California. Wow. Finally, Patrick, before we let you go, I always love to hear the Patrick DeHaan tips and tricks. What are you doing when you're looking around for where to fill up the tank, Patrick? What do you do?
The first thing I always do, of course, I advocate shopping around, whether that's the Gas Buddy app or Google Maps or Waze. I mean, really, it's about knowing what prices are around you. I just recently came back from Western Michigan to Chicago. There was about a 50-cent a gallon spread between where I was in Michigan and Northwest Indiana and Chicago. And I can imagine that there's a lot of road trippers that are going to be crossing those state lines this holiday weekend. So it only takes 10 or 15 seconds once you get used to it. Find the apps that can comparatively shop. The other thing, loyalty programs. If you're not a member of one, you can instantly save another 5 to 15 cents a gallon by signing up for one. And again, how you drive, the kind of thing that Americans, especially in a rush for July 4, aren't going to think about. Set your cruise control. Try, if you're in traffic, not to use AC as liberally. That really robs you of fuel efficiency. But yeah, slowing down a couple miles an hour. I know it's July 4. I know we only get 3 months of summer, but slowing down just a little bit can go a long way to getting more miles per gallon.
Patrick, always great to have you on the show. Enjoy the 4th.
Thanks, Josh. You too.
Time now for what to watch Thursday, July 3rd. It will be a shortened trading day ahead of the markets closing for the July 4th holiday on Friday. So let's get you up to speed here. We're going to start off on the labor front, of course. The full jobs report for June, that is coming out Thursday morning. Economists forecasting non-farm payrolls to dip compared to May to 110,000, while unemployment ticks up to 4.3% and hourly wages slow to 0.3% on a month-over-month basis. Taking a look at the Fed, we're going to be getting some Fed commentary on Thursday from Atlanta Fed President Raphael Bostic. This is coming after comments from Fed Chair Jerome Powell on Tuesday. Powell saying he's not taking an interest rate cut off the table in July and agreeing that the central bank would have cut rates by now if not for tariffs. And moving over to housing, weekly mortgage rates from Freddie Mac coming out Thursday afternoon. The 30-year fixed rate currently sitting at 6.7% as home buyers continue to navigate elevated home prices. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 12 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.